Good morning. Welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Talking a little bit about where the markets are today after yesterday's, kind of a flat day, actually. The markets were down a little bit from where they opened, not a dramatic amount. The market continues to kind of hover here at all-time highs. Now, the markets are going to look to open a little bit weaker this morning as really just this extension is getting fairly deviated from even the shorter-term means like the 50-day moving average. There is good support here, though. We do have support here at this breakout that we had just a couple of days ago to new highs. Also support coming back here to the 20-day moving average as well as the previous highs back in September. And then lastly, also we have the 50-day moving average just below that. So there is a bit of room here for the market to have a bit of a correction and work off some of this overbought condition that we currently have in place. Watch the money flow sell signal here. It is beginning to narrow. This typically has the tendency to turn down rather sharply, as we kind of saw back over here. Turns down fairly quickly and then kind of works itself through the process fairly sharply as well. We saw this back here in October as well as back here in September. When these turn down, you typically get a decline in prices here fairly quickly as prices begin to readjust for where we are. The question, of course, is what could cause that sell-off in the market. And again, one of the things that we're watching here very closely is the dollar, because the dollar has been selling off here very sharply. We've got a record net short position in the dollar. Everybody is very negative on the dollar, extremely oversold, extremely deviated from long-term means. This is the exact opposite setup of the stock market right now. So a reversion in the dollar, just a counter trend trade here, would very likely pull that liquidity out of the stock market as that begins to occur, because a rising dollar is going to impact things like small cap, mid cap, international, emerging markets, oil stocks because of energy prices. Those are all going to be subject to a rise in the dollar, provide some weakness through the economy as well because of that. So watch the dollar. It is very oversold, very close to a money flow buy signal here. And if that dollar rally actually gets started here, it could be significant enough to cause a contraction in the markets. 3 to 5%, nothing dramatic. But again, just a pullback in the markets. That would also translate potentially to a sharper rise in TLT. In other words, a drop in yields. Yields could come back to retrace somewhere back around to 0.6 to 0.75%. On the 10-year Treasury. We've seen the Treasury here pick up here over the last day or so. Again, kind of a deeply depressed money flow sell signal here. So a little bit more work in TLT, seeing money flows come back in. Also see that position start to rise here. So again, as you would expect, a stronger dollar is going to lead to inflows into US Treasuries as reserve currencies are stored there. That would also work in concert with a declining stock market. So a correction in the stock market obviously is certainly in the cards, and one of the ways to hedge that risk potentially right now may be by picking up some long exposure in the dollar or in Treasury bonds, at least temporarily, just as a hedge against risk. Those are some things we're watching here. That's 3 Minutes on Markets and Money today. We'll see you tomorrow.